Hello everybody and welcome to your Calgary real estate market update for March. We have a lot of stuff to cover this month because Canada now finds itself in a full-blown trade war with the United States. Yes, that's right. So the threats that were made in January about tariffs on Canadian goods has now been put into place by President Trump and his administration, where what they're doing is they're adding a 25% surcharge to all goods that are exported from Canada into the United States. So that if you're a consumer in the United States, Canadian stuff is now going to seem more expensive, and so you might be discouraged from buying that and instead opt for an American-made alternative. So that's the first reason that they're trying to do it. And then the second one is that presumably this is going to mean fewer sales in the United States for Canadian companies, and they might be encouraged to open up new branches of their businesses in the United States or relocate there completely in order to avoid getting caught up in these tariffs. So that's the strategy or the logic to promote the American economy at the expense of the Canadians. That's what Donald Trump is doing here. And we're acting in response to that now. So the Canadian government is applying tariffs to American goods for the same basic reason. So it sucks. Nobody's going to win in this. Only the consumers are going to lose. And I just don't think it's a great thing for either country. But anyways, that's where we're at. And Calgary is in a particularly bad position here because 96% of all of the goods exported from Alberta go to the United States. All right, we don't have too many pipelines going across the country right now for our energy, so it all flows through there. And so we've got $119 billion of exports that are now going to be subject to these tariffs, and they go back and forth, right? Because an American company would buy stuff and use it to make a product there, and then they sell it back to us, and then so the tariffs get applied both ways. It's going to be a huge mess, and not a great thing for Canadian consumers, and Albertans are in a bit of a tough predicament with that. But this was known to the Alberta government, and they talked about this when they released their budget, which came out here late in February, where it was basically modeled that where we had a $5.8 billion surplus last year, that's going to flip now to a $5.2 billion deficit. Based on 15% tariffs on goods and 10% on energy. Well, they also modeled it to be $8.7 billion with a 25% tariff on goods and 10% on energy, and it's looking like it's going to be the latter in this instance. So we're going to be back in the red. It's essentially going to bring us back to where we were during the economic downturn ages with this, and we're going to have to live it down here in Alberta until we figure out a way to get access to other markets for our energy. We're going to continue to be in a bit of a tough spot here, okay? So not great news, and we'll have to see how this goes. Shifting gears a little bit. So this is the time of year where you start to see more and more of these analysts come out with what they think is going to happen this year based on data from 2024 coming together. So CMHC put one together about mortgage consumers. Now, I know this is a real estate sales channel here, but there's lots of data from this that I think is relevant for anyone watching the market. And in particular, first-time home buyers made up 55% of all buyers last year. So that's a real strong indication that there's demand to get into this market from younger generations, which I think is a good sign for the long-term health of the Canadian market here, okay? If it was flipped around the other way with lots of older people selling and no one at the younger age is buying, I think that'd be a tough thing. But thankfully, we don't seem to have that here. And if you're between 25 and 34, that's 73% of them are first-time buyers, okay? So hopefully that trend continues because it breathes life into the lower price points, which then carries through all of the upper price points, okay? Why are people refinancing? Well, most of them are refinancing to fund renovations in their property, to reinvest it back in the home that they live in. Nothing wrong with that. Reconciling debt's also a smart move. Mortgage debt is much cheaper than credit card debt or automotive debt, so I can certainly see the logic in that too. But I do wish more people were buying rental property and refinancing to access debt from their primary residence and then reinvesting in themselves to go and buy something else. I just think there's a lot of runway available here to make good money on that in Canada if you're buying it in an intelligent way. What type of loans are people taking out? Well, this part I didn't like because I'm seeing here 69% of buyers are opting for a fixed rate mortgage despite interest rates coming down and all of the talk about downward pressure on interest rates. Okay, and I got some other graphs here to show that. So this report is now from RBC, or these slides are from RBC, and you can see here the yellow line is showing the Bank of Canada overnight rate. It's been coming down here, and it's expected to continue to go down. So with lower interest rates on the way, I think you got to be in a variable rate product right now to take advantage of that. And then when there starts to be chatter about rates coming back up again, that's when you lock into fixed. Okay, it's worked for me for decades, and I think that that's something that more people here should be looking at. Okay, affordability is getting better. Okay, so the higher you are in this graph, the more unaffordable you are. We were at peak levels of unaffordability, and so now we started to come back down a little bit. So as more supply is being added, as rental rates are coming down, we're able to have people save up a bit more money. Housing becomes a little bit more affordable for them, and it's expected to become more affordable here for the balance of the year, at least according to RBC. So that's good news. Immigration cuts are coming, going to slash Canada's population growth, but this slide is actually a more optimistic slide than what the government of Canada was saying, because last month I reported based on the data from them that they expected population to decrease year over year because of all these immigrants that are supposed to move out of Canada when their visas expire, and it hasn't been the case here. People they're going to be sticking around, and population is going to increase next year by 1% in 2025, and then a little bit less than that the year after. So I think that's good news for the long-term health of our market as well. Home prices eking out small gains in 2025, so it's going to continue to come up a little bit, and RBC is expecting sales to go up by 4.8% and prices to come up by 4.1% here in Alberta, which is also good news. So some news here on tariffs. This is from RBC and their position on tariffs, saying that if those areas that have lots of natural resources or manufacturing, they're going to get hit the most. But then it says at the end here, if the severe downturn prompts the Bank of Canada to implement deeper interest rate cuts. Okay, now this is what they did when the pandemic happened. It could stimulate housing demand by making borrowing more affordable. All right, and it's the interplay between these two factors, monetary stimulus and all this economic pressure as a result of tariffs is going to be a key thing to watch this year, and I would agree with that. All right, this is a story out of the GTA, but it's relevant for Calgary because it could just as easily happen here, the same as it did happen at the beginning of the economic downturn from 2015 to about 2018 or so. We saw this. Pre-construction home buyers are underwater, which means the contract price that they've agreed to pay for their condos years and years ago, the condos are not going to be worth as much of that in Ontario, as much as what they were agreed to be purchased for. So they're not appraising out, hard to get financing, deals are not coming together. So there's many buyers in the GTA that are in this position. And so for those of you guys that are considering pre-construction investments here in Alberta, be very, very careful with them because it's happening in Ontario as a result of oversupply. It's happened in Alberta before at the tail end of our boom. And I think it's something to watch out for right now as well. Okay, our rental markets are becoming very healthy. Yay, it's showing that you don't need rent controls because when you allow the free market to work, then more supply gets built and rental rates come down. And that's exactly what's happening right now in both Edmonton and Calgary. Rents are coming down a little bit, down 9.12% year over year. Okay, so most of these stats are about 1-bedroom and 2-bedroom apartment units. They're not about townhouses. Okay, they're not about larger units that would be more supportive of family dwellings. Those ones are still in lots of demand. So if you're looking for a good investment property, I love small starter homes, townhouses, attached units, that type of thing. I think it's a great place to be putting your money right now. Okay, but good to see anyways that some rental pressure, or some of the pressure on the rental market is coming off. Lets people save up money to buy and really put long-standing roots into their communities, which I think is good news for everybody. Okay. All right, now here's a little silver lining, is that now we're starting to see support for a transnational pipeline system here, okay? So we don't like the big bad bully from the south trying to steer our economy here. We want to be able to take care of our own, and this might mean opening up our borders to allow us to find some other partners to dance with when it comes to trade, okay? And so this means now that we're seeing more and more people that are thinking, okay, we should have a pipeline that goes coast to coast. So just perhaps we won't be fighting with each other so much now, and we can rally a little bit here in Canada and get some of these major projects built to get access to other markets so that we're less dependent on the US, okay? And so if Alberta is running a deficit, it just means we're not going to have as much money for equalization, and everyone else is going to be losing out too, okay? So we are chained together in this sense, and hopefully this means we'll see some momentum being gained here in terms of pipeline construction. All right, let's jump into the stats. So last month, the average price was $583,000. This month, we've come up just a little bit to $587,600. Okay, so one of the key differences between this year and last year is that this year we've got 75% more inventory, more units available for buyers to shop from. And as a result of that, with a similar pace in sales, we've now got 117% more months worth of supply, okay? And so months worth of supply is a good barometer, a good metric to use to try and find out, are you in a buyer's market or in a seller's market, all right? So we have been in a buyer's market, a very slight seller's market to balance market conditions, basically since last fall, and we're still in and around that, okay? And it was sort of around this time last year that things started to really heat up, all right? Last year at this time, we were at 1.1%. And then we had 3 really hot months in a row on the heels of that. I just don't think we're going to see that happen this year because there's so much more inventory. But I am happy that we're around balanced market territory because it's given buyers a little bit of breathing room here to go and find a good deal for themselves. And well-priced properties are still going to sell. So I think it's a better market for everybody to be in, even if it's not rampant price increases and that sort of thing. Okay, and you can see here from the graph, it'll show us here that pricing is starting to creep up just a little bit, same as it did around this time last year, and sales are following their traditional spring selling cycle, where once we turn the corner to the new year, we start to move up a little bit more into sales until we get into April, May, and June, which are our busiest months of the year, generally speaking. And we're not quite there yet, but we're working our way there, and I would expect that trend to continue with more and more sales yet to come. Okay, inventory by price range, and another good news graph here. So this shows the month's worth of supply by price point, okay? So you can see here, pretty well still balanced market conditions almost across all different price points in Calgary. And what I like about this graph is it shows we've got a great makeup of real estate inside our market. So if you look at the pricing here, I mean, you got a whole bunch more $300,000 to $400,000 properties. These are all of the apartment style condos that are coming to market right now. But basically from $400,000 all the way up to $1 million, you got about 500 units that are available for sale. Okay, so this is a really good sign about having a healthy, balanced makeup of real estate. Okay, it's not like we're a tourist town where everything is so super expensive that we can't even afford to live there, or it's not like we're in some sort of undesirable location where all we have available is cheap stuff and we don't have any high-end demand and more affluent communities for people to progress into. We're very well distributed with that, which I think is a really good sign and a good news story to end on. Despite all the doom and gloom that we're seeing, I still think Calgary is going to come out on top here, and we're going to be in good shape. So thank you very much for watching this, guys. If you got any questions about how this matters for your piece of real estate, reach out to a Redline realtor. I've always appreciated your business. All we sell here is Canadian real estate, by the way, in case you were wondering about that. So thanks a lot for watching, and we'll see you guys next week.